Good afternoon. So where I'm from, when you say good afternoon, you hear something. And I know I heard people laughing. Good afternoon. Marvelous. So you've heard a lot today of what the opportunities are, whether it be on SMEs, entrepreneurship, tourism, the creatives, and increasingly institutional investors, private equity, philanthropic capital are pooling resources. At the World Bank Group, we call that private capital mobilization. In Malaysia, across ASEAN and globally, blended finance is helping to scale sustainable infrastructure and create quality jobs. So in this session, we have some distinguished leaders here with me today who will share how they're reshaping their capital playbooks for more impact. Dato Feisal, I'd like to start with you, because your institution, Khazanah, has both national and commercial mandates, and it would be great for us to hear from you on how you balance between those mandates. How does profit with purpose shape your investment playbook?
Thanks, Judith, and thank you for inviting me to be here. Now, you say balance between national and commercial commitment. Actually, it's not necessarily balancing it. When you look at purpose, you have to have a purpose of which, in doing that purpose, then you can actually still make commercial returns. Let me explain to you. I guess for us, for example, when we look at purpose, it is about advancing the country, developing the country, and about inclusivity, making sure that everybody actually moves together. And in doing so, in order for it to be sustainable, then obviously you have to make it commercially viable. Otherwise, the money's going to run out. Right? So in that sense, I think when we look at national commitment as well as commercial commitment, we don't see it as a separate item. It's not mutually exclusive. Now, in terms of how we do it, now this, again, with that principle, we go across the full investment portfolio that we have, whether it's commercial or whether it's even going to our philanthropy arm as well. And when we look at Malaysian investments, we've actually clustered our businesses, and this is our purpose, right? So we look at aviation connectivity, connecting the country, and that's where we put our airlines and airports together. Energy transition, that's another purpose where we actually look at Tenaga Nasional as well as the Lestra, grouping it together. And of course, there's digital and others. And I think one thing that we do realize is it's just not about the large companies, but it's also about the community. I just want to share with you one statistic, right? I think you probably heard this before. ASEAN, 670 million population. If you look at the market, which is perhaps addressable from a business perspective, you're looking at $20,000 household income per annum. Now that brings that 670 million down to only 10% of that, about 60 odd million. So if we are looking at investing just purely for profit without being inclusive, then what we're not doing ourselves a favor in bringing that number up. Hence, that's why we do need to look at that. And we have our impact fund, we have a philanthropy arm, and we basically look at causes and themes in order to bring jobs, not to the city, but how do we bring jobs to the rural areas. For example, we have AgriData, technology platform, to bring farming accessible for the farmers. Looking at Batik Boutique, another one, artisans from the rural areas having a market. There's many things that we are doing. So that's what we are doing. We're doing it through our impact fund, we're doing our philanthropy, and trying to ensure that it's spread out. But as far as balancing, I think we consider it as we need to have a purpose anyway, regardless of whether it's commercial.
Thank you. I was actually at Batik Boutique yesterday. So Mark, I'm sure everybody would want to hear about Tottenham Hotspurs and the partnership that AIA has with them. But the insurance sector has a powerful role in shaping how risk is perceived and priced. So I want to ask you, how is AIA balancing between risk and the need for pioneering investments?
Yeah, thank you, and thank you for inviting me here today. I think we're Asia's largest life and health insurer, and we have a very significant business and presence across ASEAN. For us, it's all about our purpose, and our purpose is to help our policyholders lead a healthier, longer, and better life. And this aligns with commercial outcomes for us. So there's an inherent alignment between how we think about deploying capital and the benefits that brings our policyholders. And if you think about it in a macro context, we're a retail business. We're facing off against individual policyholders, and it operates at two levels. So firstly, it helps individuals manage certain risks that they'll encounter through their life, which if they weren't managing them with professional support, they would become onerous and prevent people from then taking risks where they need to in their day-to-day living. So that's the first point, both in life insurance and health insurance. And then more at a macro level, what we do is we mobilize domestic capital, savings, we aggregate those savings, and then we redeploy them back into the economy. And there it's all about sustainability, because our liabilities are long-term. When we underwrite a policy, we make an obligation to pay people back over a very long period, over 35, 40 years. Therefore, we're looking for sustainability in our investment program, and that means anything that is going to endure, anything that is going to manage existential risk for us. But importantly, we work with partners, because in this day and age, in terms of deploying capital, you need a high degree of specialization. You need to work with government agencies. You need to work with both the private and public sector. And one of our partners is sitting on the stage today with us. So we believe very strongly in deploying capital with impact, but we're not specialists at doing so. So we formed a very important partnership with LeapFrog, who help us through that. And it's very interesting, because the work that LeapFrog does identifies new opportunities, which has, in some cases, relevance back to our business. So one of the reasons for building the partnership is certainly to have impact and financial return, but also to generate opportunities for us on the commercial side as well.
Thanks a lot. So Fernando, LeapFrog has twice been named one of the top companies to change the world. Congratulations. But LeapFrog is known for scaling in emerging markets, but scale doesn't always equate to depth. So my question for you is, if you could share with us how you look at impact as far as your investments, and is there a balance between high impact and potentially lower returns?
Yeah, no, thank you for the question. So at LeapFrog, we've been for 18 years showing that profit and purpose are not necessarily trade-offs, right? And over these years, we earned the trust of investors that have committed $3 billion in our funds. Today, our portfolio companies serve 560 million people with essential services, which can be affordable healthcare, clean energy, loans, and insurance. And with profit in mind, we go where growth is, right? So in economies that grow 5 to 10% a year, we select sectors that are growing twice this rate, and then we cherry pick companies that are serving emerging consumers. And emerging consumers are the ones making $12 a day. They are typically underserved, and there are 4 billion of them in the world, and very much where the global demand is coming from, where the global economic growth is coming from. And that, therefore, our companies grow on average 23%, $7 billion top line today. But depth is very important, and we define depth as the quality of the service as well as the durability of the impact that we create, right? So I mentioned how we select companies, but we also need 3 other ingredients. So first is really long-term capital and partnerships with investors that share our view of where the world is going. They also need to share our values or where we can kind of nudge the world to go. And so we're super proud of the partnerships that we have. We've been partners with the IFC, member of the World Bank, for 18 years. Temasek Dilan was talking here, invested in the company, invested in our funds, and obviously a very large and strategic partnership with Mark. So that's great. Second, ingredient is technology as an enabler. So the revolution of smartphone has really pushed inclusion. Now we are seeing a second wave with AI. I'm quite positive about it, and I have plenty of examples. And third is really the LeapFrog playbook. LeapFrog playbook with this sector specialization on industries and emerging consumers, but also with impact, right? Having a theory of change and specific outcomes we want each investment very clearly defined from the get-go. And to conclude with a couple of examples, right? So it makes it more tangible, maybe a couple of stories from Asia. I met last month Nandita Kumar. She's a client of Radcliffe Labs. And she made her first blood test appointment through WhatsApp. A phlebotomist came to her home. She paid less than $5 for a flu blood panel. Received results 18 hours after on her mobile phone, and had her first teleconsultation, doctor conversation in her life from her kitchen, right? And she told me, Fernanda, I have diabetes, I know what's wrong, and I know how to fix it, right? So this is depth, right? We are actually creating a business model at a price point that works for people to manage their health proactively and their wealth and so on. Cleo was here talking earlier, like Pasar Police is the first digital and the large digital insurance company with embedded insurance in Indonesia. And in Vietnam, for example, we invested $135 million in HD Bank. And this capital was to specifically grow women's entrepreneur loan book. And the bank agreed with us on a path to net zero. They are now the first bank to commit to zero exposure to coal, are measuring scope 1 and 2 and doing super well. So profit with purpose, we don't only preach it, right? We are kind of engineering it with the heart in the right place, but really with a discipline for depth. Yeah.
Thank you, remarkable. Remarkable. So Dato, building on this conversation, how can sovereign wealth funds like Khazanah help to build a stronger impact investment ecosystem across ASEAN?
Thanks, Judith. I think so we started in Malaysia, and being a sovereign wealth fund, you want to make sure that you have all the players there to be able to have the same mindset, the same purpose, and to be able to access it. And I think Fernanda, for example, I guess we're the only ones not invested here, but we did co-invest in one particular investment. But it's having the LeapFrogs. I think when we looked at our Dana impact, we did go through 500 and go be some venture capitalists, and we had certain themes that we asked them to look at, and these themes would include upward social mobility, looking at climate change, looking at rural circular economies, and even silver-haired economies. I mean, even let's look at demographics, for example. People are aging and getting older, and we need more people to be in the productive workforce and have more mothers to come in. So again, it's through these VCs, the ecosystem, that they found the likes of Kiddo Care here in Malaysia, the likes of Care Concierge here as well. And it's through those players that we can actually have those people. Now, it's not just about the founders having a purpose and having capital, but it's getting the people themselves, the professionals, the people that can actually build and grow them. And also, when it comes to technologies, having the people that have the skill sets to code. So again, we invest in this through our K-Youth program, which is not an investment, but that's also to upskill people through our TVET. We have Asia Pacific universities where we do invest, and that's the idea is actually to increase more computer science grads, and it's building that ecosystem and understanding that purpose that we actually grow. And the other thing is it's about SMEs and mid-tier companies as well, because these are companies which are closer to the ground, have a bigger impact to the community, but they need to scale. So how do you do that? And we do have programs that help them reduce the risk of scaling up. So I think, we have us, and I'm sure you probably heard from Dylan before, it is creating that whole environment of capital, talent, investors, to really look out and go out there and find the opportunities. Now, there's another element here. We do have a philanthropy arm, which is Khazanah, and they actually seed money for social entrepreneurs. And it's from this seeding, as opposed to investment, that you actually have people coming out, and that's a very exciting crop of potential entrepreneurs that can feed through the system. It's almost like seed, like a founder's funding, right? And then that can actually feed the ecosystem for more investments going forward. And that's the role I think we can play.
Excellent. As I heard you speaking, I couldn't help but think about raising the floor, which is very important here in Malaysia. So Mark, what policy or regulatory shifts do you think that need to happen in order for there to be more insurance capital for inclusive growth?
So I think there needs to be sort of recognition for the roles that each of us have within the financial system. There are certain risks which are very difficult for the private sector to take on. So I think private-public partnerships are really important. We haven't quite cracked it yet in getting the balance right, but there are good examples globally where this has worked quite well. So insurance capital, what does the insurance capital bring? It brings a long-term perspective. So we're willing to commit capital for 10 plus years. Typically, many projects across ASEAN, across Asia, are financed out of the banking system. And they tend to be rather short-dated and refinanced. So they tend to discourage participation from institutions like ourselves, who once we commit, we want to stay invested because we're matching cash flows over a long period of time. So I think in public-private partnerships, there are ways of structuring those transactions that perhaps give more surety over the offtake of what the project is and allow insurance capital to stay deployed for longer. Over and above that, I think we want to see more liberalization, more development in the financial sector. People often ask me, what's the biggest constraint we have for writing more life and health insurance? It's really our ability to deploy capital. And our capital markets in this part of the world are by and large quite thin. So we don't get access to long-term assets. So working with partners who can be further into some of the development that can generate new asset classes that can help us work there. I just wanted to say one other thing as well in terms of some of the things that we're doing that speak really to inclusion. The two aspects for us is both on the wellness side, so helping people deal with a very real problem, which is medical cost inflation, which is running at over 10% across many of our markets, and that acts as an exclusion for many people to participate. And eventually, the cost of insurance becomes non-affordable if that continues. And then, secondly, financial well-being, ability for individuals to deploy capital for long term as well. Because quite often what we see is people take short-term decisions to the detriment of long-term outcomes. So our role there is to sit alongside our policyholders and basically reassure them that they stay invested over full market cycles.
Excellent. So Fernanda, I want to ask you then, how do investors push past vanity metrics? Many blended finance instruments and impact funds rely on measurement. Where do you see the gaps in what the sectors currently measure, and how can we move away from the vanity metrics?
I have to say, I don't see a lot of vanity metrics these days. So the impact investment industry has evolved over 20 years. It's already $1.6 trillion industry. And it was built a lot on the decades of research of the World Bank and academics on development. So the leaders in the industry actually got their act together and used decades of research, best business practices, and created standards that are playbooks, that are free to use, available to everyone, like IRIS Plus and OPIM, right, that was launched by the IFC. So we don't quite see that, but they could be more widely used. And then we like to push things up perhaps on a couple of areas, and I think there is a gap, not a gap, but maybe an opportunity. We are sector specialists, so in terms of what the sectors we most like to invest in, we invest in financial services, healthcare, and climate solutions, and we have separate investment teams with a doctor on the healthcare team, a couple of actuaries in the financial service team. So we measure specific impact with metrics that are very particular to products, right? So Obviously, for climate is carbon abated. For financial services, for example, is claims paid and a bunch of other metrics, renewals. For healthcare, it can be very specific, like the average decrease of cholesterol levels in our client base, or DALYs, right? So disease-adjusted life years, which is, you know, the health and disease burden that these companies are trying to address. For the first time, we are doing and using DALYs to measure the impact of our health insurance companies this year. And it's super interesting and super exciting because it creates this common language, right? Common language with governments and regulators who are trying to solve the same issues and have a budget issue, and obviously could definitely help with partnerships and supporting the industry, right? Especially the inclusive healthcare insurance industry, private insurance industry. So yes, I think, and the second one very briefly is the integration between environment and social. So for us, even for healthcare and financial services companies, we do have climate metrics. So we measure scope 1 and 2 for all of our insurance and bank companies, and we have a dialogue with the management team on a path to net zero. So both integrating ENS and then more specific metrics for products and outcomes and quality.
Excellent. So to close this out, I want to ask each of you for, we have 1 minute, a word. When you think from your institution's perspective, how do you see the future?
Me first. Okay. Optimistic.
Ooh.
Can I use a hyphen?
Please.
Very positive.
Excellent.
See how I see the future. With lots of partnerships, okay, with the 2 words too. Partnerships between government, private, philanthropy, most important, and obviously Mastercard does a wonderful job, including this conference. Thank you.
So collaboration, partnerships, jobs, optimistic. The future is bright, ladies and gentlemen. So please join me in thanking our distinguished guests for being here, and thank you.